When a business needs additional money to expand, purchase inventory, or get through a tight pinch, they turn to David Allen Capital. David Allen Capital is a broker that represents several lenders, allowing us to provide our clients with the best loan offers available. We can get you funds without all the hassles typically associated with business loans. Our lenders value your cash flow more than your personal credit score. The process is simple. We can get you an approval in one business day and provide you with funds quickly. If you could benefit from a business loan of $20,000 to $500,000 and you're generating at least $100,000 in business revenue, we can help you. We have a straightforward one-page application and only need a few simple documents to generate your approval. Let us help you grow your business.
When it comes to securing financing for your business, there are various options to consider, with business lines of credit and loans being two of the most common choices. But how do you decide which one is right for your specific needs? Let's explore the key differences between business lines of credit and loans to help you make an informed decision. Understanding business line of credit versus loan. Before we explore the pros and cons of each financing option, let's clarify the fundamental differences. Business loan. A lump sum of money borrowed for a specific purpose with set repayment terms and interest rates. Business loans are typically used for large, one-time expenses. Business line of credit. A revolving credit facility that provides access to a predetermined amount of money. You can draw from this line of credit as needed, pay interest only on the amount used, and reuse the credit as you repay it. Business lines of credit offer flexibility for ongoing or unexpected expenses. The flexibility factor. If flexibility is a top priority for your business, then a business line of credit may be the ideal choice. Unlike a traditional loan, which provides a one-time lump sum, a business line of credit gives you the freedom to access funds when you need them. This flexibility can be a lifesaver for businesses with varying cash flow needs, enabling you to cover unexpected expenses or take advantage of growth opportunities. Interest costs, business line of credit versus loan. The cost of borrowing is another critical aspect to consider. Business lines of credit typically come with variable interest rates, while loans offer fixed interest rates. If you're concerned about interest rate fluctuations affecting your costs, a business loan might be a safer bet. However, lines of credit can offer lower interest costs when managed wisely. Qualification and application process. When comparing business lines of credit versus loans, one key advantage is the ease of qualification and application. Traditional banks often have stringent requirements for loans, including high credit scores and extensive financial documentation. In contrast, obtaining a business line of credit is typically easier, making it a viable option for newer businesses or those with less than perfect credit. Collateral and security, a loan requirement. Most business loans require collateral, which is a valuable asset you pledge to secure the loan. Collateral provides security for the lender, but can be a risk for borrowers if they're unable to repay the loan. On the other hand, business lines of credit are often unsecured, meaning you don't need to put up collateral.